Today we are going to have a look at a process. The process, we have a few new members, and we also have some professional traders that are joining us. And so I want to kind of run through this method because it's super powerful and it's super simple, and I think that this will help drive the majority of the theory home. And of course, a bit of practice on top of that, and I think everything should certainly start to look a lot better. And so here we're just going to look at the process of trading supply and demand, and I'm going to explain it relatively in depth, just so that you understand why we're looking for the things that we're looking for. Because of course, if I say something, for example, point A, I mean, it's not useful unless you understand why point A is important. So I just want to ensure that it's super clear. So the process that we're going to discuss today, this is going to be a process that you would use when you're looking to take a trade. So you're looking at your chart, and it's really nice to have a process that you can follow to help you identify a trade. And so you look at this chart, I mean, what do you do? And so the purpose of today's presentation is to help you do that. So when you're stalking your trades, for example, let's have a look at the S&P. So you're looking like this. And we're looking on, let's say, the 4-hour chart. I mean, how do you know where to trade? How do you know if we should be buying or selling? Where do we get in? Where do we put our stops, and where do we get out of the trade? So this is going to really help you. So when you're doing this in the morning, you kind of drag them over. You're kind of making a decision, what should I be doing? This is going to help answer that question. Okay, so the process is super simple. Initially, we want to start off by identifying the trend. We should be buying or should we be selling? And we're going to look for the origin of the current move. And then I'm going to explain why this is important, actually very important, just on the next slide. We're going to be asking the question, has price been there before? So this is going to refer to the parent and child relationship that we discuss. And this is important because a parent is supply or demand, a child is a reaction to the supply and demand. And last week in the Coach's Corner, we're doing an experiment where we were asking members to take on a given pair and to perform this analysis. And there was a gentleman who took on the euro US dollar, and he mentioned an area where he was looking to sell. And then I said, maybe you should look at this area instead. Well, maybe, rather, I prefer to look at this area, and I'm going to explain exactly why I said that, because this is super important. Because often, if you're really good at identifying supply and demand, you'll be able to find these good entries, and then maybe price will come, it'll stop you out, and then it'll move back in the direction that you're expecting. And so this will help avoid that, and it'll help increase the likelihood of you being in the trade while it's moving towards your target. Okay, then we have this bit, which is when we simply draw the box on the chart, so we know if we should be buying and selling and where. We have our quality checklist, which we'll have a look at, and putting the order in, and that's it. And the homework, and we can put it out here as well. See if you two guys fancy participating in that. Right. So, identifying the trend. What do we do if we want to identify a trend? Well, ideally, you want to see a significant amount of price. And what does a significant amount of price mean? Well, that means at least 200 periods. I like to see quite a bit more because I want to know if price is pulling back to a certain area. And then you should be looking at it, and you should be able to answer up, down, or sideways within 1 second. And if you can't, then it's probably sideways. If you can't say it's up or down, then it's neither up or down, and then it's probably moving sideways. And these are the ones that you potentially want to pass on. Let's have a quick look here at this pair here. So we are looking on the 4-hour chart on the Euro USD, and we can see about 350 candles. This is fine. This is a lot of price. We can go like that if we want. We can actually see more. So if we zoom out all the way here, you can see that we can see an awful lot of price, and we are looking at about 464 candles. So you can see very clearly what direction this pair is moving, and it's very clearly moving higher. So that means that we want to be buying, because if we come in and we have a look at this, is price likely to continue higher or turn around and go down? Well, it's likely to continue in the trend that it's currently moving in. So we want to be buying. Okay. So that was easy, super easy, identifying the trend. Let's have a look at another example. Let's add the Aussie US dollar. What about this one? What's this one doing? This is also moving higher. We'll just run through a couple of pairs. Here we have the pound. What's this one doing? You can see we went down and now we're moving up. What does that mean? When you see this, then maybe you're going to click out on a bigger time frame. And you can see here that on the bigger time frame, we are actually, if we really zoom out, we're actually in a downtrend longer term, but looking like we're having a bit of a pullback to supply. So price will probably come back to, towards these lows here and then continue its march lower. So if we have a look at another pair, this one here, a very clear, nice downtrend. The dollar yen, this is pretty sideways. You see we've come from the high to a low, to a high, to a new low. So price is slowly zigzagging low. So when you see this, go to the greater time frame. Any clarity? No clarity on the weekly chart. See, we're actually moving higher on the weekly chart. So you want to be buying. But buying on the 4-hour chart is not going to help you because then you'll be trying to pick a bottom. So you want to be identifying the weekly areas at which to buy at. We have a couple of those on here. Currently, price is reacting at this one here. And we have another one down here, and we probably have something in here that we could have a look at. This is not a fresh area. So it's a really simple process for helping you decide if you should be buying or selling. Here you can see the price is moving lower. See, it's pretty clear that prices, we've kind of moved up and then we're moving down again, so we're making new lows. So it looks like that we should be selling here, looking to sell at major supply. Okay, so that's a simple bit. Then we have this one, find the origin of a current move. And this is where you ultimately start your analysis. So if we go back to the euro, which is a really nice example of price that is trending on the 4-hour chart, where is the origin of this move? I have to go out once again. You can see the origin of this move is actually all the way down here. This is where this move originated from. And this is important because we had a trend that was going down, and now we have a new trend that is going up. That means that we have demand that is in control. So for the daily chart, you'd want to be, your analysis for demand would start here. This stuff in between, you could trade, but this is lower probability. And the higher you come to the top here, so buying here, this is lower probability. This is a little bit higher. This is higher than this one. This one is higher than this one, and so on and so forth. So the closer you come to the origin of the move, the higher the likelihood the price will respect the level. It doesn't mean you can't take this. It just means that you're going to have to manage it a little bit differently. If you go to the 4-hour chart, you can see that what we can see here, the origin of the move is, you can't really see it on this chart. So this is a very good indication that price has been moving higher for a long period of time. But if you go to the hourly chart, you can see that price is actually moving lower. On the half-an-hour chart, you can see that price is actually drifting lower. So everything is dependent on the time frame that you're looking at. If you go to the hourly chart here, and the origin of the move, the most recent move is from this high down to this low, and it looks like price is pulling back. So we are reacting at demand and we're moving higher, and we're returning to the point of origin for this move, which is down here. So this is a shorter term trade. This is not a trade that you would hold for weeks, but this is a trade that you would hold kind of intraday for example, some hours as an example. And so you'd be looking to sell up here. So that was, that's finding the origin of the move. Let's find another example. Look at the pound. Let's go to a longer time frame. You can see the origin of this move is down here. This is where this move originated from. So this is higher probability. The closer you get to the top, the lower the probability. And you can see that since this was formed, price has already been back to this area of demand. It's been tested once. So ideally, you don't want to be buying for a price any more expensive than the lows of this pullback, which brings us back to this one here. Good. So the point of origin is this one down here. You can see I have an entry to buy just up here. Stop is just below. Anticipation that price continues here. Let's have a look at another example. the origin of this move, well, we can't see it, so we're going to have to go out. You can see the origin of this move is up here. So higher probability, lower probability. And if you want here, you can have a look at the fibs. You can see that, I mean, ideally, you want to stay on the deeper retracements, deeper than 50%. And so you can certainly take this, and these will often move, react at, say, the 38%. But the higher you go up here, the better. And you can see we have this really nice, excuse me, 79% retracement, which overlaps nicely with probably this weekly area of supply that you can see just here. So this would be a very interesting entry for us. We have another one here at the 62. So we have two interesting entries here. And on the weekly chart, I mean, we have a potential micro accumulation here, but it's not something that that I'd be willing to trade on the weekly chart. So you want to look for the origin of the move, which is going to be closer to the highs, the major highs and the major bottoms. Okay, so let's move on to the next one. This is, has price been there before? The parent chart. So you look down and left for demand, and you look down, sorry, up and left for supply. So if you go back to the example that we just had, this one here, I mean, if you look at this one here, you can see that, I mean, price has already been down to this level before. So assuming that we're going to take the most highly probable area for reaction, it brings our price down here. So we're going to mark off a low. We'll put it around there. And then we're going to scroll back. We're going to see what price is reacting on. You can see that price, this is a reaction to this, just here. What does that mean? Well, that means that this is the first time back to this area. And so ideally, you would want to take the trade at a price cheaper than this one here. So you could actually bring it down to, for example, here, which is at the edge of the area like so. Just as an example. This is not well formed, and we'll look into that in just a second, but you can see that, I mean, doing it this way is very good because it enables you to find the reactions to supply and demand and the supply and demand. And this one here, well, you could think this is a major swing. Is this demand? Actually, no, it's not. This is a child, and the parent is here, as you can see here. And this is where price reacted. Okay, Keith is asking here, should you attempt to trade within the mid-third of the higher time frame curve at all, do you think, Sarib? Yes, well, I like to, for this one here, I wouldn't be interested in buying anything that is lower than here. Ideally, I want to be on the deeper side of the 50%, because I don't like to fiddle with trades. I like to put them in and leave them. And if I put it, I mean, of course, you could buy down here, but you'd have to fiddle with it an awful lot. You'd be glued to the screen, and I don't want to be glued to the screen. I want to be with my children, and so I'd wait for a deeper retracement. This one here, when price came there, this was probably closer to 50%. Yeah, it was exactly the 50% here. So this is the one that I'd be interested in. This is the most expensive price that I would pay for this particular security. So you definitely want to look at the deeper retracements, Keith. Okay. Yes, and so, I mean, if we use this as an example, which is let me turn off the indicator rectangle, so we have to do this ourselves. I'm going to move all of this over here. False. So we have identified this to be the origin of the move. And so now, you do what it says here, keep moving your rectangle until you find a fresh parent. So we have this one. So we want to be able to roll back. Is this fresh? No, it isn't. We have this. And so we move our rectangle to the one it reacted on, which is around here. We'll just put it like that. Is this fresh? No, it isn't. And delete that. Oops, come on. It's reacting to this one here. And is this fresh? No, it isn't. And then you can ask yourself, is this one fresh? Yeah, this one is fresh. You see, price has not been back to it since. And so while price could easily have a reaction here and a bounce, the major moves are going to stop at areas of supply and demand where price has not been. You can see, yes, you can keep going, and like this one is a reaction to this and this, but for this one here, this is still a disparity, and this will be rebalanced once price returns here. And you could keep going, but you can't keep going. You have to take the one that's closest to price, the first fresh area that is closest to price. Otherwise, you'll be looking at the dawn of time, and then you'll never get any trades at all. You have to get the ones that are closer to price. And so this one here is the one that's closer to price. And when you look at this one here, and this actually looks really interesting because this is independently established as well. So I like this one here as well. So you have a couple of areas here. We could actually box off these two. We could include these into the same area like this, like that. So this is a good area. This is close to this origin here, and this is a decent one here. Then you would, just for the sake of looking for additional, areas, you could mark off the low of this one here. You can say, is this a fresh area? Is this like a nice fresh area? It is, because it's not reacting to anything in here. We have this one down here, but price has not been down there at all. You can see it's still completely untested. And this looks like a bit of a major low. So we can go like that. So we have, I'm not going to cut corners. I can do these properly. So we have that one, and we have the one just below. I don't like this one that much because when price left, it came back pretty close. So this is the one. I'm not going to draw this one off there. I like this one like that. So if we go to the daily chart, you can see now that we have this one here, this one, and we have this one here. So these are the ones that are interesting to us. It doesn't mean that this one won't work, or this one won't take a test, or this one won't even take another test. This may very well take another test. But ideally, you want to take the first test and leave them. And you can see when price came back to this one here, it went pretty deep into the area as well. And so you don't want to be buying for a price any more expensive than 28.13 for this particular one here. Good. So we'll remove these because now we've managed to find our areas that are interesting. And that brought our attention to this one here, and a little bit below this one here. So this is the one that's the fresh area of demand here. And if you want, you could take a whole area so you had a nice protection for your stop. So you could put your stop somewhere down here. And so you keep moving the rectangle until you've found your area. Is that pretty clear? Shall I do another example maybe? I can do one. Do you guys trade like longer term or shorter term? Because if you want, I can go onto the smaller time frames or go to the higher time frames. We can do an example on, for example, the 15-minute chart as well. Matter of fact, I'm just going to do that just so we can see. So we'll start from the beginning. Shorter time frames. Okay, so we'll be on the hourly chart. So if this is our trading time frame, the trend that we're looking for, you can see here that we are moving higher. And so you mark off the low, which is here. Just like that. Okay, has price been back here? It has, it's been back here. So we mark off the low here, and then we scroll back and say, what is this reacting on? Then you go back here. Oh, this is a very good sign that we're in a downwards market because we have to go really, really far back in order to find it. Can we find it? And price is really moving. If we go to the bigger time frames, we'll probably see that price hasn't been back here for a very long time. It's all the way down here. This is actually a really nice area that we tested. And so this is actually the area that price tested. And it was the second test first, second test. And so if you have to scroll really far back, well, that means that we're probably trading in the wrong direction. But shorter term, we can look here. But if you want to be on the right side of the trade, then you want to probably zoom out. So if you're experiencing what we just experienced there, just go to a longer time frame. And this becomes super clear now that, okay, we're actually correcting on the larger time frame. So buying on the hourly chart will be counter trend and potentially put us in a bit of trouble, because the big moves are going to be moving down. The stronger moves. You see how price is kind of having a bit of a slow time moving higher. We have a lot of the green candles moving down. And so, I mean, this took us out of the buying situation and put us in the selling situation. And so now we could scroll back and have a look. And we don't really have a major swing high here. This is kind of price just correcting on the short on its way higher. But we do have, if you want to trade counter trend, you can see that we have some wicks here. And the price had a nice reaction here. So we're going to mark this off here. And we're going to go down to a smaller time frame. We'll do the 15-minute chart. You can see here exactly what we reacted on. We reacted on this here. This is what price reacted on. So you don't want to be buying at a price any more expensive than that. And this is not even a nice reaction, which we'll get to next. But this is a nice reaction. And so for buying, we could put it on something like that. So back to the hourly chart. See, price is going to have a pretty good push lower there. We look at the depth of the curve. See, this is putting us at a 38, which is pretty shallow, which I'm not too keen about. So I wouldn't even take this one here because it's simply too far to the top. And we are in a counter trend, so we can expect deep retracements because we are counter trend. Okay. So keep moving the triangle, which we've done. And if we have a look here, you can see, I mean, what we're looking for here is we're looking for short periods of accumulation and short periods of price moving into the level and then out again with great force. You want to see green candles into a few periods of accumulation and then green candles out of. And this is both for these tops and bottoms, but also these continuation patterns. You want to see green candles up to accumulation and then a nice release. If you have a candle is kind of crawling up here, well, this tells us again that there's not an imbalance in supply and demand. There's not a lot of demand below here, and so price will probably move through here and move down to the point of origin for this move, this entire move. So you want to see those really strong moves up, accumulation, and then continuation, high and low if we're selling. So if we have a look at this little graphic here, for drawing these areas, it's pretty simple, and the new version of the indicator is drawing them correctly. But just to show you what we're looking for, I Googled, and these are the terms that are being used within the supply and demand community, how you have the proximal level and the distal level. So you have current price, the proximal level is the level, so it'll be the bottom of supply, and the distal is the high of the highest high in the area of supply. In contrast to demand, where we have proximal, which is the top of the area of accumulation, the bodies of accumulation, and the distal is the lowest low in that area of demand. And so if we look down here, you can see some pretty good examples where we have price moves down into, we accumulate, and then we leave aggressively. So the rectangle will be drawn from the highest high of the bodies that are related, like this, for demand, and like so for supply. And so you would simply find the area, the lowest open or close of the bodies of accumulation, and you draw it from there up to the highs for this area of supply. So it would look like this. If we just find a couple, you can see that and here we have, this is a nice example that the indicator found, and we have price rallied, we accumulated, and then we left. So this is good because this is correctly done, because the candle, the highest side of the candle is the close. So the box has been drawn from the close to the lowest low, which is this candle just here, as you can see. So if we were to find another one, you could see here that these two here, because the body of this candle is in the range of the previous, these two are related. And so for this one, we would draw it like this, from the high of the highest candle body to the low of the lowest low, like so. So it'd be drawn like that. So this is where we'd expect a reaction on the next approach. If we look for something like this, which is really messy, you can see that, you see how the body of this candle is not in the range of the previous, And so it means that these ones are not connected or related, which in turn tells us that we have micro-continuation patterns in here. So price is going to probably move through the lower ones and go towards the higher ones. You can actually see here that price has kind of moved down, accumulated, moved down, poked into the accumulation, and then started to accumulate before it dumped lower. And so this is probably a reaction to supply further to the left. And so this is not something that we would want to trade. Yeah, so that's it's pretty clear. It's a pretty simple process. Here we have another one, price moved lower. We accumulated for one period, and then price moved higher. So for this one, you would draw. Where are we there? From the high, the highest high of the bodies, of which there are one, to the low like so. And this is how we would draw for this one here. Luckily, we only had one, so it's pretty easy. Here we had two, which is pretty easy. When they look like this, then they get messy. And if they're messy, then you shouldn't take them. You should pass them. If they look like that, don't touch them. If they look like that, then jump into them. This is a nice one. This is a little bit messy as well. On the smaller time frames, the indicator will find the demand down in here, which this reacted on. So this is where you would expect price to react. So it probably moved through a child and moved down into the parent here, and ultimately down to the major parent, which is down here. Okay, so it's pretty simple. Now we have the quality checklist, and I've got it on my whiteboard here. So you take a look at the way price left the area. This is super important. How did price leave accumulation? So if we clear this off, we go to the 50-minute chart, and you can see that we have this one here. I mean, how did price leave here? You can see the price left pretty nicely. We had a pretty decent move lower, but there was nothing great. You can see how price, we left, we moved 3 periods away, and then price managed to accumulate for a long period of time before it finally figured out that it wants to go lower. This is a better departure. See how price, we had 2 green candles, and price tested on the way down. This is a really nice departure. This is what I like to see. Price left very quickly. I mean, many times the size of supply. I like that. That's a nice one. So if we have a look here, you can see here that, oops, we had some supply just here, which has been taken out. When this was established, look how price left it. 1, 2, 3 periods of bullish selling pressure. This is lovely. Price came back. This is where we tested before we left. We have a look here. You can see we have kind of parent, child, child. Price went back to the parent as expected here. And this is where price reacted. And so price left, it came down, accumulated, rallied, accumulated, and then it left very, very quickly. And then this is a really nice departure here. So this tells us that we have some demand in this area. But you could see when this area is established, price went up, but it started to come down again. So this tells us that there was not enough buying. So we didn't see the imbalance in supply and demand until the second child was established. Parent, child, child. So the second child, price left. And so this tells us that we do indeed have demand in here, but they didn't enter the market until around here. So after this parent was formed, then we had the first child, which fed into here. Then we started to see a lot of buying into the market at the point that this first child was being established. Okay, Keith is asking, the proximal line would still be the highest close candle within the accumulation group of candles, 1 to 5 of them, correct? That's correct. So you look for the highest, the side of the highest body. That makes sense. So price moved up nicely here. We have a pretty decent release, which is what you want to see. You want to see an imbalance in supply and demand. If we go down here, you can see that, I mean, this is a really nice imbalance. We have a lot of trading here, but this is a really nice imbalance. And also, if you see trading like this, where price is moving around like this, and then all of a sudden we have like an influx of buying, I mean, this means that everything has been cleared out here, so liquidity has been thinned, and then this is new liquidity that's entered, boom, price jumps north, which enables us to consider this for a trade depending on what's going on below. If we have a look, here as well. I mean, price rallied, we accumulated for, we had roughly 3 periods of accumulation, then price left very quickly. Here we have a nice release as well. And so you're going to see these an awful lot. And the cool thing about this new software is that it's going to be showing you a lot of really good levels. And most of them are respected. I mean, if we have, let's take this one here, for example, we have this one here. This was validated as being a turning point. Price came up, we poked into it, and we left from there. We had this one here, the validated, price came back to it, and we left from there. We had this one here, price came back to it, and we didn't really do anything. Keep in mind we're reacting to this up here. Then we have this one here, the price reacted there. We had this one here, price killed it, went back to the source of this move, which will often happen. This, when you see this again, this is back to the first couple of slides where how deep in the curve we are. This is roughly 50% and price has already been back there. So you don't want to be buying it here, you want to be looking a little bit lower. If we have a quick look at that, it was 62%, 62%. The price has already been back to that level, and you only want to take the first one, so you wouldn't want to take this the second or the third time. You could do, but it's not recommended because the first test is always the one with the higher probability. Keith is saying here, the indicator showed that the demand zone was consumed. Did the algo decide that those wicks closed by consumed, the demand level, the 9th of August? This one here, yes, well, when price moves above this area of supply, which would have, where'd you go? Which would look like this. So when price moved through that, then this one is removed. And so then it'll remove the rectangle and draw the X. And the cool thing about the X is that it enables you to identify the areas that consumed other areas. So you can see that this one here was consumed by this one here. So this is the one that you consider for the trade. Price came to it and went up. Then this one here was consumed by something that went down. Here, this one here was consumed by this one here, and this is where the trade took place. And the reason that it's a good idea to identify the area of supply and demand that consumes opposing supply and demand is because, I mean, that shows us that there's strength there. We had an area that was here, that was tested, tops of which were tested once. Then price accumulated on top of the level and that cut through it. That means that we have a lot of selling here, strong enough to move through this one, and take out this one just here. So this is where you want to sell. So we know that there are likely going to be a collection of unfilled limit orders up here that are going to kind of cap price for the shorter term. Okay. Then you want to see, I mean, how far did price go when it left accumulation? We can see here when this area was established, I mean, price left. It moved, so we have 10 pips, and it went down 60 pips, so it left 6 times the size of the supply, which is good. This is very good. And we have this little area here, which was about 3 pips. It went up 12 pips, which is about 4 times the size. And so that's also a pretty good move higher. Then you have this one here, which has also been qualified. I mean, this is lovely. This is a very nice level here because when we have, this is 6 pips, and price has moved so far 28 pips. 28 pips. And so this is also a pretty decent move. Keep in mind we're reacting at this pretty important supply here. Price, I wouldn't buy here until this is gone. When price moves through here, then I'll be looking to buy here, but not until this is gone. And so you can see that, I mean, price has to move a relatively good distance before that we'll be willing to consider it for a trade. And if we look here in this new version, you can see that we're looking for at least 3 times this area of supply and demand for price to move within 3 periods. This is also on the checklist. So if we go here, And see how long did price accumulate. We could also add this one here. How long did it take for price to move the distance? Let's put like risk reward distance. That's also very important. And you can see here that we only want to look at areas that take 3 periods to move 3 times the supply, the size of the supply and demand. And of course, if you want to really scrutinize it, you can say, okay, we want it to take 2 periods. Then you'll notice some of these areas are going to disappear. See, this one here is gone. This one is still there. This one is still there. And we have a couple of other ones here. This one up here, I think there's one up here which has disappeared. This is good because we had a small area, price within 1, 2 bars, price moved 3 times the size of that. We had the same for this one and this one. And you can see me look at these levels. And this is a lovely level. Area, price left. In 2 periods it left probably 4 times the size of this. And look at the reaction we saw there. And so you'll notice that these are going to be much higher probability. Mr. Lloyd, how are you? Good to see you in here. So there's a lot of clout in getting this configuration right. And I found that if you leave it on around 3 to 3, like so, 3 times risk reward and 3 times 3 periods, then I think it's going to be pretty good. And so I'd definitely try and use those. Then we have here, how long did price accumulate? Well, you can see here that price accumulated for 1 candle, 1 period, 1 period, 2 periods here. We had 2 periods, 1 period, 1 period. So we have really good areas here. What you don't want to see is extended periods of accumulation like this. I mean, this is nothing. This is terrible. Because let me draw here. So if we have an area, pen color green. So if you have an area of demand here or supply, price comes up to it. If price is able to go up and kind of move around in the area for a while before it kind of gradually leaves, I mean, that's not what you want to see at all. You want to see price come down to an area like this, accumulate for 1, 2 periods, and then leave very quickly. Price came down, we accumulated for 1 period, and then we left. And price hasn't even been able to come back to this area yet, which is good. So, which makes this area here potentially interesting to us on the next approach. So you want to see quick periods. This is also okay, but you can see that price has kind of been in and around the area, but price did leave very quickly. So this tells me here that this is a reaction to this. So here we have the parent, and here we have the child. As a matter of fact, I think we looked at this one, didn't we? We had like a few children, 2 children here, and this is the parent here. So this is the real demand, and this is actually just a reaction to demand here. So you want to shoot lower for your entry on that one. Excuse me. If you have a look at this, you see that price sold, green candle down, have 2 periods, 3. Let me see. We had 3 periods of accumulation, and then price left. So this is also an interesting area. Keep in mind, we'll be trading against the trend, which is up. So this is a counter trend trade, higher risk. But this is also, if you consider the Fibonacci or how far back we are on this one, you can see that we've, from the high to the low, this is around the 79%, which is also a pretty decent area to sell at as well. So there's a lot going for that area there. Let me remove these rectangles, delete everything, good. And so you want to see shorter period of accumulation. This is no good, this is okay, this is no good. You can see how price really kind of hung out in this area for a while. We poked into it a couple of times. So this tells me that if this holds, the price is going to move at least to this area here, probably down to this area here. Probably down to here, which is at the low of the wicks, because price has already been back to the low of the wicks there. So this is putting our stop in uncharted waters, which is where we're going to get the best protection. So this is good. So stop's down there. Okay, if we have a Look, has price been back to the area of accumulation since it left? If you look at this one, no, price hasn't. If you look at this one, price has actually not been back all the way here. This is actually a reaction to this. So this is actually not demand. Can you see why it's not demand? You can see it's not demand because price didn't manage to move away. So the real demand entered the market here. And this is what I like about this, is that price traded up and through this area before it came down, and then we saw the good release. And so if we find another one, actually we had, there's the pound on the 4-hour chart. How we had this one here, 1, 2, 3, 4 periods of accumulation. Has price been back to this area? It has indeed. It's been back to it one time, and it went very deep into the area, which of course reduces the likelihood of the area of demand holding in this case. Okay, Keith is asking, so really the time, how long it took for price to cover the distance to opposing supply and demand is a measure of strength. That's right. That's right. So, I mean, this is a really nice push away. This is a really nice push away from here, and this is a nice push away from here. Although this doesn't look like anything here, if you go to the 5-minute chart, there's going to be ample trading opportunities in here. Apropos the shorter time frames, you can see how price left this area very quickly. We've already been back to the highs here, so you want to go deeper, which price has moved. We had a decent departure here. Price tested it. We had a decent departure here. Price tested it. Again, this is kind of returning back to the area once, twice. On the third attempt, price went through it. Good. Yeah, and that's pretty much the checklist. I wouldn't overcomplicate it. I would just look for the areas where price really manages to cut away. You want to see opposing supply and demand consumed. You want to see market structure fail. And this is going to definitely increase the likelihood of these areas holding. Okay, so if we go down to here, putting in the order, where would you put it in order for an area? If we have a look at, let's fix something we haven't looked at, the Aussie yen. So if we have a look here, so let's assume now that we're on the 4-hour chart, we've identified an area that we want, and let's see, we're going up or down, we're going up, so we want to be buying on the 4-hour chart. Where have we found something? We can see that we found, this looks like a really nice area here. I like this one here because short period of accumulation, price really left, we gapped up and away from it, and we have not been back to it since. So that's still fresh. And so ideally you would put your order to buy at above the area plus about 5 pips, and below the area minus 5 pips for demand. And for targets, you would be looking for opposing supply, in this case supply. And currently we have, assuming we got in here, we have supply. I mean, this is pretty messy here. There's a lot of trading in and around here, so I wouldn't be too worried about price moving through this. We do have this, which is looking pretty strong. It's also the high, but we don't know what price looks like until it comes here. So you want to keep your eye on price the way it moves down here before you decide if you're going to take this trade or not. Because if price comes down here and we establish an area of supply that accumulates for a short period, it leaves very, very quickly in very limited time, and it managed to take out, for example, the swing low here, and that is less than 3 times the size away from this area of demand, well, then you wouldn't take the trade because price is going to have a tough time moving higher, and it's going to find resistance, liquidity, and then move low, or rather challenge this area of demand. And so you want to find areas of opposing supply and demand that are at least 3 times far away. These are generally the ones that are going to hold better. Okay. Yes, and that's it. It's a pretty simple process. And so I'm just going to go over it on a couple of pairs, and we're gonna have a quick look at that. And this is an example that was done in the coach's corner, where we had a gentleman was looking at this area just here, and he said, okay, we had that nice green candle. First of all, you can see that mean, price is kind of drifting lower, was the logic. Price is drifting lower from here. Price left this area very aggressively. So you put a box around here, the highest high, which is like that. And you say, okay, this is where I want to trade. So you look at this and you say, okay, go back to the slides, go to the top, to the list, identify the trend. We find the origin of the move. Where's the origin of the move? Well, the origin of the move is actually up here. So this is the one that's going to catch our attention a little bit more. But this one was taken closer to the bottom. So if we have a quick look at how far price had to travel, 62% roughly to reach this area of supply here. So I mean that's a qualified area. Has price been back to this area before? Has price been back to this area before? It has. And how do I know that it has? Well, it has because of this stuff here. You can see this wick here. This wick here is eating liquidity. It's consuming liquidity. And so there's something going on here which would lead me to believe that this is the microparent and this is the child. So we'll keep going. Yeah, here we have the parent and the child. And so for that, it brings us back to this next one here. So we draw our box, which we've done, and we go to the quality checklist. And you say, okay, is this well-formed supply or accumulation? No, it isn't. Why isn't it? Because there's an awful lot of accumulation there. And so what we want to do here is we want to go to the smaller time frame. So we'll go to the 15-minute chart, and you want to look for that area that this is reacting on. So you mark off the high like so, then you scroll back, and you can see it right there. This is exactly why this is interesting. So you move it to the high of the high, to the low. Here we have the accumulation candle. We have the one that left. This one is in the range of that one. This one is in the range of that one. So the area here would be from the high to the low of the lowest candle, which is like that. So this would be roughly where we would want to sell at, which is roughly where price came back to. So it came back here. We had one test. Price came off, and then we had a deeper test. So and this is actually showing us that we have actually divergence going on, where we have this going on here. And if we throw the strength histogram, histogram, then we'll be able to see this here. We'll be able to see this now, and you can see how, if we maybe, what's the setting on here? That's fine, that's okay. So you can see how price is going up here. I don't know, you couldn't call this divergence because it's doing the same thing. Oops, sorry, I've got my line turned on. There we are. See how price is moving higher, like so. It's also moving higher here, but due to the fact that price is moving into this area of supply, you would expect price to wean. But you wouldn't take this until you started to see the strength histogram move away like so. And so if you're waiting for kind of a confirmation or a test, well, then you would wait for price to kind of do this, move down here the lower half, around the zero line or below, before you sold the pullback. And we got a pullback here when price was pretty negative already, which is pretty good confirmation that this area is going to hold. Okay. So we identify this area here. Just going to draw it in again. Sorry, kind of mumbling all over. Where is it? Okay, it's here. Got it like here. Then you do the quality checklist. I mean, what does this look like? Is this a good looking area? Price came down. We accumulated for 1, 2, 3 periods, and then we left. I mean, we have 3 periods of accumulation. Price really left very, very strongly. So yes, this is a pretty decent area of supply. It's a continuation pattern. So if you're considering for a second, let me zoom out so we can see where we are in the curve for this whole move. Go from the high to the low. We're exactly at 62% Fibonacci retracement. And so, I mean, when you look at this, you can say, has price been back there? Well, it has. It's been to the high of this high. So the table, the pancakes have been taken up to this level. The next pancake is going to be located above here. So those hungry sellers, those forks are going to be poking into the next one, which is going to be located above this high here. So you don't want to be selling for a price cheaper than the high of this one here. And our entry was just above that, and this is pretty close to where price came. 16 pips. Let's see how far price went. Went about 50 pips away. So it was a pretty decent risk reward. I think you could have got maybe close to 3 to 1 on that one. Yeah, but this is a mess. So this would really be a good indication that you shouldn't be looking here. And also this, when candles are doing wicks on the way down, this tells you that this is where the supply is. Or you rather, it doesn't tell you anything. It tells you that you should look there. And so you have to move your attention from this to this. So this is a reaction to this. Good. Quantity checklist, we've done. You put in your order, and that's it. So this order has been filled. Depending on where our target was, we would have either hit our entry or still be in the trade now, because our stop would have gone 5 pips above this. So it would have been at 1851, which is up here, which is right there. So we'd still be in this trade if our target was a little bit lower. Yeah, there's no real demand until we get kind of down here. So this could end up working out nicely. Good. So it's a pretty simple process, just a matter of moving through the chart, kind of dragging the chart. So grabbing price, dragging it onto the chart, and finding those areas that are interesting to us. If we do one more very quickly, we'll do the euro. British pound will be on the 4-hour chart. See, where's the origin of the move? We can't see it. Actually, it's down here. So you mark off this low, or we'll just put a box around it. So okay, here we have demand. Mark off the low. We say, okay, has price been back here yet? Let's have a look. Yes, it has. It's been back once. Oh, and a whole lot. So that means that the real demand is down here. So we're going to remove this. We don't want to go get in there. We don't want to get in there. We want to wait for price to come back here, because this is where we have the fresh demand. It doesn't mean you can't take these. It means that the bigger moves are going to happen from down here within this 120 pip range here, starting at the 8100 area and going down to the 70, 79, 80 area. And you can take these in here, but you're going to have to manage them differently. Here we have a good area. This is still kind of untested. You can see there's some, maybe want to have a look in here. Yes, the good thing, because you can see that we had this one here. So this is actually, this is a reaction. Sorry, we're above that, sorry. So we have this one, this has been tested once, the 88 and 91. This area may still work again because we had a good reaction and price did not go into very deeply into the area. So this could work, but technically speaking, this has been tested. If we look a little bit lower, let me mark that one off so I can find it. We want to go down here. We want to have a look and see if price is reacting somewhere there. No, it doesn't look like there's anything on. So this could be a nice fresh demand here. So you could just take this one here, leave it as 4-hour demand, do analysis to quality checklist and see if it's good. Where are we? Sorry, jumping all over the place. If you look at this, come on. Candle to the left, accumulation, 1, 2, 3, 4, 5, 6, 7. No, I wouldn't touch this one because there's extended period of accumulation. I'll take the one down here because this is where price left and it left quickly. And here we had 1, to 3 periods of accumulation that look about like that. Sorry. Come on. Oh, stay still. There we are. And it stayed from, actually this is the low. This is the candle here. So this, the indicator did it correctly. So it did it like that. So this is the one that is completely fresh, untested, with the best imbalance. So this is the one I would take. I wouldn't touch that. I might have a go at this one with reduced risk. But I think this is a pretty decent area down here. This is not so interesting because price has already been back to this level here. There's nothing in here that's interesting. There might be an area of demand in like around here, maybe somewhere in this, but I think this is more a reaction at a resistance becomes support than it is a demand. And so this is kind of like a psychological entry point for some of the the big traders, but I wouldn't want to touch this until price came down to here, and again maybe an attempt down here. But yeah, it's a pretty simple process. I hope it's it makes clear. Does this stuff make sense? Is it like something that you're comfortable with, or does it not make sense at all? You're comfortable with it. Cool. Excellent, Keith. Excellent. I'm pleased to hear. What about you, Hal and Mr. Lloyd? Is that all right? Yeah, good stuff. Excellent. Good. And if I overcomplicate it, tell me, and I'll try and simplify it a little bit. But it does get a little bit technically complicated. And I think it's the process of becoming comfortable with the complexity of it that results in really good entries. Ideally, you want to be able to answer the question: has price been back here before? Yes or no? No? Okay, how did price leave the last time it was here? And so that should kind of bring your attention to key areas in the market, like this and this. Look how price left when price came down here. I mean, look how price left here. And so that's pretty much gist of it. Okay, but sorry, really small text on my screen. Still need to revise to clarify my understanding of the parent-child. And do you choose to trade on child levels sometimes? I do, but I'll often just wait for the parent. And this is simply because, I mean, if we look at this example we had on the pound a second ago, I mean, we have on the 4-hour chart, and we have this area here, pretty ugly. I mean, this is the parent. Price poked into it, making this the child. Would I trade this one? No, I wouldn't. And why wouldn't I? I wouldn't because, first of all, the child caused price to move deeply into this parent, and so I wouldn't pay a price any more expensive than the 28.10 on that. It's simply too risky. And I wouldn't take this because my stop, if I wanted to take this, I'd have to have an entry maybe looking like this. But that doesn't give my stop protection because my stop would have to go below the parent. So I'd have to, sorry, move that. I'd have to move my stop down here, which makes the ability of a 3-to-1 reward risk. It makes it more difficult because then I need to make sure that that we don't get any supply that is formed, I mean, 180 pips away from the high. So if we go, where does that bring us? Okay, so there can be no supply being formed until we get around here. And this has been tested, so this is not very strong. So I get that, and that's okay. But I simply wouldn't take this one because price has already been back there. I wouldn't go, I mean, I might have a go at that on the second test, but I would manage it carefully, and I'd want the currency strength. This is where I'd use the dashboard to kind of help me assess if this level is going to hold. So I'll wait for price to come down to the area. When I saw the dashboard starting to turn around, we can put that on there quickly. Dashboard. And so I'd want the dashboard to show me that this area is going to hold. So I'd want the pound to pick up in strength and the dollar to decrease in strength about the same time as when price reaches down here. Then I'd feel more comfortable about it. You could also go to the small time frames, the 1 minute, the 5 minute chart, and study the histogram and then jump in, click in at market once the histogram starts to give you some confirmation. But if you trade parents, then you often don't need confirmation. You can just get in, and there's often going to be a reaction that's big enough for you to get at least a 1-to-1 or 1-to-2, and then you can get the risk out of the trade if that's what you choose to do, if that's how you choose to manage your trades. Thank you all for being here. It's an absolute pleasure to go through this material. And you guys in Australia, sleep well. You guys in the US, have a good day, and everyone else, enjoy the day. Thanks for watching.